Here to discuss, Ray Washburn, Charter Holdings CEO and Sunoco chairman, to discuss this and more. So, Ray, give us a read of kind of what you're seeing on the ground right now, real time, with regard to the health of the consumer.
Well, it's interesting. You know, consumer debt is at an all-time high. So we saw a lot of retail sales, especially for back to school, get pushed much earlier in the summer because schools are starting earlier. So I think you're going to see kind of a second quarter load of sales that the third quarter is going to be affected by it. So we are very cautious about looking at the third quarter. First quarter was extremely strong across the entire portfolio. We're seeing it in our restaurant business as well. Second quarter is a little bit flatter, and I'm very actually cautious about this third quarter because the sales.
Oh, sorry, just to kind of put a fine point on it, you're cautious because of the overall debt balances that consumers have, and you think that will impact their willingness and ability to spend more from here?
Yes, and I think the second quarter, I think a lot of sales were pushed up this year from this year because of school starting earlier as well. But on the luxury side, which a lot of our centers, luxury brands, you know, they're doing extremely well. But the legacy brands, the Gaps of the world, things like that, their sales has actually been kind of flat. But we're seeing the luxury sales hold up, but it's primarily in accessories, you know, handbags and shoes and things like that. But we've had a good year. I'm just optimistic. I mean, I'm very, cautious going into this year just because consumer debt is so high.
Interesting. Speaking of kind of the debt world, what about the commercial real estate side of things? I know you have a real estate portfolio. You're a private equity investor as well. Is that creating any concerns on, especially within kind of the Texas market?
Well, I'll speak to retail, and really on a national basis. The vacancy rate in retail across the country is about 4.25%. Less than 5%, an all-time low. There's no construction lending going out because banks, we build office buildings, apartments, and everything, and banks have basically just shut the door on everybody. There is no lending going out the door at all right now. And so that is actually good if you already own retail, that it's going to hold firm because you're not going to have competition coming on. Tenants that have vacated to bankruptcies like Bed Bath Beyond, things like that, those have been quickly backfilled. And so we're encouraged by that. And then this big merger going on in the luxury space with Tapestry and Capri and people like that, that's an interesting dynamic that's going to happen because you're going to see premium retail, much like premium office. Tenants are more and more going to gravitate to that because if you're a one-off brand that's now been bought by LVMH or others, they're clustering their luxury retail together and just going into the premium center. So we've actually are a beneficiary from that. But the centers and malls that just have one or two luxury tenants, Tiffany used to be a one-off brand, and now it's part of a much bigger group. They're going in and trying to cluster all their tenants together. So you are going to see some softness, I think, and more softness in the secondary malls and retail from that standpoint.
Ray, back to the consumer. So do you continue to see or expect to see this dichotomy you were describing between luxury and sort of mid-market?
Oh, yeah. The luxury has held up strong through the entire, since the pandemic. And we're seeing same-store sales and luxury sales. And you can look at our portfolio. And we had the best of the best brands. And they're all having a very good year this year. And we see it going on. But, again, it's kind of the have and have-nots, much like it is in other parts of the real